Hello, this is Rex Crandell. I'm a CPA and attorney in Walnut Creek. I have a practice that is exclusively uh, estate planning, wills, trust and estate administration, and income tax. Do all kinds of income tax, individuals, estates, trusts, um, businesses, companies, but we do quite a bit of estate and trust income tax work also. The purpose of this program is to help get an idea for the viewer on what are the steps needed when someone passes away and a new trustee or administrator comes in and needs to manage the assets. What kinds of things are needed in terms of documents, procedures, strategies to manage asset after the uh, owner of the asset has died. So the session objectives, uh, early in the estate administration process, we do document review, or getting the list of assets together, um, determine what might be a probate asset, what's a trust asset, and by the end of the session, should be able to analyze the trust instrument and review the pour over will and relevant related documents, identify and locate the trust and estate assets, determine asset ownership and titling, and compare the initial trust and probate procedures. Uh, we use a large checklist uh, that came from continuing education of the bar. It's attached in your materials, and it helps us with identifying issues. Not every state and trust administration has the same issues, so you need a comprehensive list so that you catch the tasks that need to be performed. Um, It's also helpful when you're reviewing a trust to determine what the operative procedures are. These A trust is basically marching orders for the trustee to determine what their responsibilities and duties are. Uh, we go through and look at a trust. The first thing we do is I read the trust instrument for the provisions of the executors, successor trustees, who are the beneficiaries, how are the assets going to be distributed, look for other provisions, asset distributions on death, other requirements for asset distribution. Are there any subtrust? In our office, we prepare what we call a pink sheet, and we print it on pink paper, and it is basically a summary of the trust provisions so that when any staff member is looking at uh, the project, they have a place to go to where they don't have to read multiple pages and lengthy paragraphs. They can get an idea of what's a summary of the trust. It's helpful during the administration process. Uh, what are the distribution methods? Are there subtrust? Do you want pro rata percentages or non pro rata? Whether they're disclaimers. Disclaimers are when someone has a right to an inheritance or bequest, and within 9 months of the date of death, they disclaim or send a notice to the trustee that they're not going to be accepting the bequest. It's also used for tax purposes um, because usually the beneficiary doesn't want the assets, or they want it to go to their um, next of kin who is going to inherit if they disclaim um, the bequest. Administrative provisions, there might be provisions detailing what taxes are going to be paid pro rata or paid out of the estate or trust, allocations during trust administration between principal and interest. If you deal with split interest trust, um, these are the type of trust where there's one income beneficiary and then a different residual beneficiary, and then there's always a play between what's principal and interest because each of those beneficiaries have different rights to the assets. Investment, trustee investment provisions. Yeah, the prudent investor rules, sometimes they're waived. What that means is a trustee is required to only invest in low risk investments to protect the beneficiaries from wild fluctuations in values. Conservative investments are usually the best, but a lot of trust will say those provisions don't apply. They can invest in whatever they want. Sometimes if they've already got a portfolio with a high risk portfolio, uh, they just say that the trustee can invest however they want, and the beneficiaries have no right to come in and help reduce the risk of the asset fluctuation. Special tax and structural consideration. Um, if there's determine if there's an S corporation. S corporations are flow through entities and they're tricky on death of an owner because a trust cannot own an S corp for more than 2 years. The general rule is you create what's called a Q sub, qualified subchapter S subtrust, and so that IRS is trying to keep the interplay between an individual taxpayer receiving a K1 and taxable income from an S corp and a trust receiving income from an S corporation. But if you have an S corp, be careful because if you don't follow the rules, the S corporation can be forfeited by the IRS, causing a termination, and then the corporation's now a C corp that pays tax on its net income, and an S corp does not pay tax on its net income. And it's also treated as a sale between two different entities. So there's some significant administrative risks in when you have S corporation assets. What are the gift powers? These seem innocuous in the beginning. What is the ability to make gifts or not, and to subtrust, how to fund the funding provisions carefully. Oftentimes there's no requirement to make gifts during the administration of the trust. However, if you've got surviving spouse or dependent children, especially special needs type children, the prime trust will create a special needs trust and allow for current distributions to maintain that person, usually a child, adult child, maintain their lifestyle during the administration process. Okay, always check for ambiguities. When it's not clear what exactly are they talking about. When we're drafting trust documents today, we try to reduce ambiguities by creating a statement of intent in the beginning of the trust so that if there's anything later in the detailed wording, you have this model of what you were trying to accomplish, even if the other wording in the trust doesn't quite comport to that. It helps clarify situations and reduce conflicts. If you have a pour over will, what are the terms? Usually it says that there's a pour over will, put whatever I want distributed, do what the trust says. If the trust is invalid, do what the trust says anyway, and look for those provisions. Oftentimes, if there's a young child involved, you have to look for the provision to nominate a guardian for that minor child, and the will is the only place that it can happen. The nomination of a guardian doesn't mean that they're appointed. You have to wait for the judge to determine that the person who's been nominated actually qualifies with a background check in their abilities to act as a guardian for a minor child. Other relevant documents, financial statements, life insurance policies, deeds, business agreements. We always pull the deeds for any real property that we're working for. Business agreements, these could be buy-sell agreements. Oftentimes in LLCs and S corps, we have operating agreements that limit how shares can be transferred, how can they be sold. They might be written in such a way where there's a first right of refusal from the other surviving living owners. Businesses are quite complex when you're trying to value them, and valuations for inheritance tax and cost basis for businesses, depending on the size. I mean, it's not uncommon to have $10,000 or $20,000 cost for an appraisal of a business. So in the list of assets under administration, we always verify the title. Okay, it's in the trust. If it's outside the trust but subject to the will, we make note of that. Also, make note of the fact that if an asset is identified in the trust but not owned by the trust at that particular time, we always look to see if there's a possibility of doing a Hegstead petition, where we petition the court to put the property back into the trust. Frequently, people will refinance their house and they have a house in their trust. They refi, the bank makes them take title as an individual owner. The lender gives them the loan, and then the client forgets to put the trust ownership back on title. And for those circumstances, a Hegstead petition could be one petition, which is a lot easier than doing a complete probate on an asset, real property that is not owned directly by the trust. Okay, initial steps in trust administration. Trustee has a right to reject. The 16th Amendment says you can't force somebody to do something they don't want to do. So a trustee's nominated and they can either accept or decline. If they decline, then the successor trustee is taken into effect in management. They also have to notify the beneficiaries of their management, where the trust is being administered, phone numbers, contact information. In most trust and estate administration, we're trying to avoid a probate, but as you're tracking assets and you find that you've got over $184,500 in fair market value, then you're stuck with the probate process, which might take 15 months, 2 years, and be quite more expensive and cumbersome than you would have in a trust administration. Okay. Trust administration focuses on the assets that are titled in the trust. The trustee can just come in and manage. The trust gives the authorization. Um, when we're dealing with assets and we're not intending to have a probate, sometimes we have problems with banks releasing assets. Um, we do a 13-100 declaration that the person is entitled to manage the assets based on the will. And if the bank or financial institution doesn't provide the assets to that administrator, then the legal fees will be paid by the financial institution. Okay, so a decedent had a revocable trust and listed a vacation home in the trust, but the deed was never transferred into the trust. This happens. Uh, Unfortunately, it causes a probate unless the trust was clearly identified. The asset was clearly identified in the trust. And then we're talking about the Hegstead petition again. Um, the concept of clearly identified property, title, information, a trust is notarized. It shows that it has a granting clause. This Hegstead petition basically picks up the theory that though all the elements of a deed were complied with, so the court treats it as if it was a deed and puts it back in the trust. Um, that's one reason to help your clients by reviewing their estate plan. Uh, Ambiguous trust clause, divide the assets fairly among the children, but did not define the word fairly. Uh, One of the ways that we handle ambiguities in a trust instrument is we prepare a notice of proposed action. And this notice tells the beneficiary what the problem is or what the trustee is going to do. And when that, in other words, the trustee says, I'm going to divide the assets equally between the beneficiaries. And you give the notice to the beneficiaries that they have 60 days to object to that action. And if the trustees or beneficiaries do not object, then the trustee goes ahead and does that action, and it cuts off the rights of the beneficiaries to later object to. It doesn't have to be, in this case, my example is clearing up ambiguity. It could be a wide variety of different things, selling one property, keeping another, allocating more money to a disabled child rather than equally among all children. The notice of proposed action is a very handy tool. We have an example in the materials. It's very helpful to protect and the trustee from liability exposure. Okay. The cross-referencing documents in the trust, what we do is we take the asset list that we've received or created in the office. Uh, in the materials, we've given you our asset list spreadsheet to help you identify each of the assets, how it's titled. It's in the trust, it's in the decedent's name, it's community property, it's separate property, and that's part of the data gathering for trust administration. And it helps you identify what tasks need to be completed for the administration. Sometimes trust administration over probate, most all the time you hear that you don't want to have probate, don't want to have probate. Okay, well, I've seen cases where probate's better. One example was a settler for a trust or a will, and they had quite a bit of assets, and a couple of the beneficiaries were very litigious. And then they didn't want them to tie up the trust in litigation. So the settler just decided to push everything through probate, get court supervision from the beginning. Another example of that, had a client, a mother, single mother, and a minor child. And in her case, she didn't want anybody, didn't know anybody to be a trustee. And she felt it was better to have the probate court uh, oversee the administration for her minor child. So she created a testamentary trust, which is a will that requires a trust be created in the probate court. That also requires the court supervision. Um, Oftentimes we'll see a will that describes an asset or a trust that says an asset is included, like a certain Charles Schwab bank account or investment account, and then you go and look at the title and it's not held in that name. We have problems sometimes with transfer on death, pay on death accounts. The person didn't put it in their trust and they named, let's say, two children as the beneficiaries on death. And the trust, even though it says it's in the trust, has no control over that asset. And we caution against using pay on death accounts because during trust administration, oftentimes you need a certain amount of liquidity in cash in order to handle the expenses that are necessary for trust administration. And when you divert all the cash away from the administration of the trust, it can cause cash flow problems for the trust. Okay, next. Uh, in the next session, we're going to be covering asset management, obtaining valuation and appraisals, managing investment and financial accounts, handling real property, uh, specific asset issues, and inventory and appraisal issues. Preparing for the next session. Should familiarize yourself with evaluation, fair market value appraiser, licensed appraisers. Uh, we generally use licensed appraisers for real property, but you can also use the probate referee. There's usually 5 or 6 probate referees affiliated with every Superior Court in California. We have 58 counties. Um, and an appraisal by the probate referee is equally valid with IRS as a licensed appraiser. Sometimes I caution people about using Zillow or Redfin to try to determine value because there's no authoritative support for their values. In out-of-state real property, there's no problem if it's owned by the trust. If not, then you might have a probate in another state. They call that an auxiliary probate. Investment accounts, dividend reinvestments. We try to get people not to reinvest their dividends because the fiduciary accounting work multiplies by having to do a dividend as income and then reinvestment, adding it to the portfolio. fiduciary accounting would get quite complicated in those situations. Um, Wasting assets will cover what you should do and getting assets out of the estate or trust. We had one time when a person owned a horse and we got rid of that horse pretty quick. We didn't want it in the estate administration long term. Um, Environmental problems, if there's toxic waste on a property, anybody on title is personally liable. So if you're a beneficiary, you want to make sure you're not receiving toxic waste property. You have to maintain insurance on all property during administration. You need to look for safe deposit box and intangible assets, passwords, access to computers, banking records, automatic transfers. Those are important items to look for during a trust and estate administration. Um, Review the fiduciary duties for next class, prudent investor duty to preserve and protect assets. Uh, uh, Go through the checklist of the trust administration, the large checklist that we provided to you. You're surprised sometimes about all the little details that need to be done. So today we talked about a thorough analysis of the trust instrument, identifying key clauses, dispositive provisions, powers of appointment. Um, Powers of appointment are giving someone the right to identify new and different beneficiaries. GST tax should be written out. It's generation skipping transfer tax. That has to do with inheritance tax and the IRS Form 706. Life insurance, real estate items. Okay. Okay. So initial steps, we covered what you do when you become a trustee or an administrator, when you're filing your petition. Use a checklist, identify the assets, try to get harmony. Another thing we do in trust and estate administration is give lots of information to the beneficiaries because when beneficiaries don't hear anything or see any details, financial details, they always assume that something's wrong and that the trustee or administrator is taking assets. So we like to have an open book policy, give the beneficiaries a copy of the Merrill Lynch statement showing all the assets and buy and the sell. Then they know they can see what's going on. So that concludes the second session for post-mortem trust and estate administration.